In the last month, the Federal Reserve has arguably thrown more at the coronavirus than it did during the whole of the financial crisis. Our next guest says that the Fed's now entering some potentially dangerous territory by connecting with individual businesses. There's a lot it's going to have to watch as it does this. Joining us right now is Glenn Hutchins. He is the chairman of North Island. He wears a lot of different hats, but he's also the co-author of an op-ed in the Wall Street Journal with Gary Cohn from yesterday. The Fed's new mission to save the economy. Hey, Glenn, it's good to see you.
Nice to see you, Becky. Hope you're well.
You too. Let's start off talking about the Federal Reserve and this mission that it's embarked on. I know you think that this was an important step for the Fed to take, but you also say that there are some potential pitfalls that you hope the Fed can avoid. Walk through what some of those risks are.
Yeah, well, first, I think it's important to emphasize the Fed has done a phenomenal job here. They've acted incredibly quickly at huge scale and stabilized these markets, which, as you guys have reported on, have been very volatile. And they've also innovated, particularly by dealing with the municipal security markets and corporate credit markets in ways they hadn't done before. So it's all been terrific. The CARES Act, however, gives them the capacity to lend $4 to $5 trillion, which is a massive amount of money, directly to corporations all across the country. That's a brand new task. And Gary and I were concerned that we make sure we get that right, both from a commercial point of view, that those and a legislative point of view, that those loans have the intended impact, but also that it engenders confidence on the part of the American people, as opposed to what we saw as a consequence, quote, the bailouts in '08.
What do you think so far of, obviously we're in the very early days of this, but what do you think the biggest potential risks are as we kind of move down this path?
Well, the big issue that we're focusing on right now, which is the appropriate one, is something different, which is getting these loans, the PPP loans, out through the Small Business Administration to the laboring very small businesses. And that's basically right now a huge logistical challenge. And so that's and that plus the direct grants to people who are in need are the most immediate task. The next task behind that, now that the Fed has stabilized the markets for creditworthy borrowers, is to infuse credit across the economy in a way that allows companies to bridge from here to the end of the crisis. That's going to be a massive challenge of understanding how to extend those loans, what channels to put them through, banks or direct loans, and how to structure them in a way that, in my view, ought to be concessionary, should be not the penalty type of rates that we usually have charged to banks in the past that have gotten the economy in trouble. But these corporations, as no fault of their own, are laboring. And I think we need to really make sure that we finance them in a way that creates the bridge for them. These are good businesses that are creditworthy, but just don't have the kind of revenues and access to capital now that they would have had before and will have in a recovered economy. That's a very, very important task.
Hey, Glenn, Steve Leisman gave us the results of a poll that he conducted with CNBC earlier this morning, just asking the public how they feel about whatever you want to call this, relief, bailouts. But they seem to be very happy with the idea of giving additional loans and assistance to hospitals, to local small businesses, to restaurants perhaps, and even retailers. But then it kind of drops off a cliff in terms of how happy they would be with giving some of this assistance to things like the airlines, to Boeing. Move on down the line from there, you know, whether that be casinos or cruise ships. How do you kind of deal with this political reality, especially the longer this plays out, of who should qualify for this and who should not?
Well, I think you have to make a distinction, Becky, between the kinds of loans that are really grants. The kind of loans that they're going through the SBA are really just money being given to those companies in the form of relief. All they have to do is maintain their payrolls to have those loans extinguished over time. That's a very different thing than extending capital to existing companies that have good operations that might not have access to the capital markets for this period of time and keeping them operating. I think perhaps it won't be unlike trying to make the argument that we need to save the banks in '08 because the banks were a linchpin to the whole economy. If let the banks go down, the economy would go down. These businesses are the linchpin to our overall economy. If we let them go down, the hole we will have to dig out of will be greater. Remember, the duration of this crisis will determine its depth. if this goes on for a long time and significantly today healthy companies cannot finance themselves, then repairing that damage will be an enormous task when we come out of this crisis. Being able to keep those companies operating through that part of the crisis will be incredibly important in shortening the duration of the period in which we can recover and get back to a prosperous future. By the way, I have no doubt that we're going to have a very prosperous future, that we'll be able to rebuild from this. America will be richer and stronger than it has been in the past. So I'm an optimist, but I think we have to alleviate the damage along the way so that we can get back to our prosperous future more quickly.
Hey, Glenn, you sit on the board of the Federal Reserve Bank of New York, and obviously the Federal Reserve, everybody associated with it, probably has to be pretty cognizant of some of the inequality issues that came up after the Great Recession. Just the idea that, it felt like those who were the haves maybe got helped more than the have-nots because of the stock market going up, because of this inequality and the issues that kind of surfaced after that. How do you focus on that from the Federal Reserve's perspective this time around to try and make sure that there is less of that feeling that's out there? Because, it just seems to me that there's going to be a lot more of those feelings coming out of this. You've got blue-collar workers who are being asked to work on the front lines while white-collar workers get to hide at home and stay safe. You have small businesses that really are the lifeblood of the economy, but also have a much shorter time that they can go without a lot of help and assistance, or a much smaller backdrop to be falling back on if this lasts longer than expected. How does the Federal Reserve, or how should they be thinking about that?
Well, speaking not for the Federal Reserve in this case, but for kind of myself, how I think about this, the points you've made are extraordinarily important ones. That's why the first round of the CARES Act relief went to, a guaranteed payment to everybody who needed it, extended unemployment insurance, food assistance, help for the hospitals, all the things you talked about, and why round 4 that's being talked about right now will have to deepen and address that. I think the larger policy backdrop and the larger argument you have to make for the kinds of things. By the way, this is not just a Fed action. This is the Treasury Department, because anything the Fed is doing will be based upon a guarantee layer from the Treasury Department, and it's also as a consequence of a legislative mandate. So this is not just the Fed acting alone. And so I think that what you're going to have to do is have a set of standards that make the kind of lending you do faithful to the legislative mandate. This is why we talk about having good governance in this process as well, so that you can target these loans at the companies that preserve employment, in ways that soften the blow that you're talking about. The people who are the hardest hit by this, though, and need the most immediate assistance are those that are addressed by these other, unemployment insurance, food stamps, and other kinds of programs. But you're absolutely right to focus on that. This is a crisis that's disproportionately hitting disadvantaged people. You see the statistics, the health statistics in New York show that the Bronx and Western Queens are the places that are the hardest hit by the virus, as an example.
Glenn, you mentioned a couple of times just the volatility in the markets and how much instability we've seen there. From your perch at Virtu Financial, which is a market maker, what can you tell us about how steady those markets are at this point? Are there pockets or places that you kind of worry, or do you think the Fed's moves to this point have kind of addressed a lot of the instability that we had seen early on in the markets?
Look, I think the Fed has done a very good job of stabilizing the markets. And I would make one broader point, which is that remember that markets serve to give us a price today for a future stream of earnings. To the extent that the future is looking through a glass darkly, the one question none of the experts can answer for us is when this is going to be over. Since you don't have the answer to that question, you can't forecast with any degree of reliability any stream of earnings. That's the major issue with pricing securities today, fixed income and equities and other asset prices. And that's why markets will, now that we're out of the period in which there was a massive grab for liquidity and hedge fund portfolio rebalancing and into sort of more of a regular weight market, my view is we're going to continue to have volatility around these levels as we get good news or bad news, and people adjust. But the problem is, until we have some sense of when this crisis is over, you won't be able to get any kind of forecast that allow you to price securities. That's got a big point number one. Big point number, but to answer your question, I think the thing that people have focused less on than market levels is the massive amount of volumes that have gone through the system at a time period when we're working with split staffs and people working from home. And so there have been some very significant issues that have arisen around that, what they call the market operations. It's something that the regulators, not just the Fed, but also the SEC, have been focused on. And I think it's a hidden success. We've done a very, very good job of managing all this volume and all this activity that has stressed every part of the market's infrastructure, not just the trading community. So I think that's something that's held up very well. That's what you might say the dog that hasn't barked in this crisis.